the Vero Finnish Tax Institute to support the tax administration in Tanzania. So there was a pilot that was done to improve operation efficiency, especially in terms of examination and tax audit. So basically what we did is try to evaluate what was the impact of that pilot study. So the work was done in collaboration between members from the Tax Administration Authority, the TRA, Tanzania Revenue Authority, the University of Dar es Salaam, and members from the UN-WIDER. So I'll try to be brief. First, I'll start to provide an overview of the country. As we know, Tanzania is a lower middle income country since 2020, which is 2 years ago. And these statistical populations I need to revise them because last week we had an official publication of the 2022 census report, which revealed that the population of Tanzania is now approximate to 61 million with an annual growth rate of 3.2. And as you know, Tanzania is combined with two countries, Zanzibar, which contribute around 1.8 million, and the mainland Tanzania contribute around 5.8 million. And in terms of the GDP, the country has a roughly GDP of 67.8 billion, with an annual growth rate of 4.9% as at 2021, and with GDP per capita of around USD 1.2 thousand, and with a tax to GDP ratio of 12,000, which is below the African average of 16. And as we know, many countries passed through the COVID pandemic crisis. So this was the overview of the performance of the economy prior to the pandemic, and there was a dropout in terms of economic performance. And in terms of characteristics of the economy, it's an agrarian economy where agriculture contributes the largest shares, followed by manufacturing and constructions, whereby there are current major projects that are ongoing. In terms of fiscal performance, which is we are going to add the area that we are trying to discuss today. Well, the countries experience a significant deficit. The domestic resource does not suffice the expenditures. So the biggest struggle right now is to see how best the domestic revenue effort can be used to fill the gap. So currently, the level of borrowing, domestic and external, is a bit high, and you can see the trend. And serious debate are ongoing. And in terms of source of revenues, much of the revenues comes from taxes on imports. Basically, this is because Tanzania serves the landlocked countries, several of them, as well as the income tax. But let me go straight to the background of the study. Basically, this study emanates from the global initiative of SDG 17, where the agreement was to strengthen domestic resource mobilizations. And there is international agreement of supporting developing countries to enhance the resource mobilizations. But it also echoed the Addis Tax Initiative 2015, where also African countries had committed themselves to ensure that several efforts have been done to enhance domestic revenues. So far, there are quite a number of efforts that have been done. And one of it is on ICT. Quite a number of efforts have been done, and one that we see usually is the shift towards the e-filings, the electronic tax stamps. Electronic fiscal devices are widely used. So what we say is, in terms of meeting the commitment, there are quite a lot of efforts that are trying to cap the potential of using ICT in Tanzania. So what we have seen so far is the use of ICT so far has helped to collect a lot of information which have potential to do more research. So as I've said, this work is a result of collaboration between the Finnish Tax Authority and the Tax Administration of Tanzania, where there was a pilot project that was done in 2019. And the idea was to check whether we can improve the way that the examinations and tax audit is done. Prior to the pilot, what was done was to do the random check. The challenge of using the random approach is that you combine both high risk and low risk. So which means there's a way that you'll incur more cost rather than use the risk-based. Risk-based, actually, you just develop a mechanism where you only do examination and audit to those taxpayers who are high risk. So in a way, it's try to check whether using a different approach will have some impact in terms of operational efficiency in the process of doing examinations. So what was done was to develop an Excel which actually produce score allowance, whereby it enabled to produce a taxpayer which are relative high risk and according to the rank. So the tax administrator will always examine or audit only those taxpayers that are perceived to be high risk, rather than to spend more time and cost examine those are lower risk. So we put more effort to examine those taxpayers which are relative high risk. So the idea of this study is to evaluate the revenue impact by introducing the new approach of undertaking the examination and audit in the Dar es Salaam office. So the data use the information from iTax system, from the pilot and the control tax offices, which are actually in other major regions, which is Arusha, Dodoma. These are major regions in Tanzania. But the treatment were in Dar es Salaam, which is the major commercial city in Tanzania. So as I've said, the study used the iTax system informations and cover the period of 2015 up to 2020. And it includes information about the initial declared and adjusted taxable income to see whether there is any impact of the newly introduced system in the pilot study. So it contains like more than 25,000 observations. And in terms of empirical strategy, the study deployed the diff and diff approach. I will not go in detail about it because we know how effective the approach is used. So the treatment group are tax officers in Dar es Salaam, and the control group are the said tax officers in other 6 regions. So I'll not talk much about the approach because the strength of the approach is well known. So the only technical issues was to check the major assumptions of diff and diff, which is to have the parallel trend. And we noticed that there was sort of complications which we had asked to drop the 19th, which is the largest corporations. So we had to drop, and we came to realize that the assumption hold. So we decided to drop some of the observations, which we didn't see that they have some implication in terms of our results. But in terms of the number of adjustments, definitely there has been a trend in increasing both in control group and treatment group. And this is the table revealed that in both control group and treatment group, the number of increases. But important is the main results that we received from the analysis, which I will jump all these other estimation results. The first key result that we realized was the shift of the process of the audit from the random to risk-based increased the revenues from around 10% to 15%, depending on the modeling strategy that was used, because there are different strategies that we deployed within the diff and diff approach. But important also is the number of adjustments did increase, but definitely the revenue increased. But also the impact, what we found is that the impact was due to increase in the adjustment corporate income tax, but no significant change in the personal income tax is seen. But more important that we notice is the impact is more in the service sector. And since you know that one of the area that Dar es Salaam have is more of service, small businesses which are based actually on service sectors. So what we end up on concluding is there's a need to extend the interventions, because this one was done only in tax region in Dar es Salaam. So our proposal is to see whether the intervention can be scaled up in other tax offices in other countries, so that it can take efficiency in terms of operations. So our results suggest that the impact on revenue was positive and large compared to the additional resources, and the intervention was highly cost effective, and no new personnel was hired, because the idea was to strengthen more effort toward those risk taxpayers, and actually left aside those are perceived to be less risk. So our takeaway is that it's important to continue to examine the revenue impact of tax examination in Tanzania under the new e-filing system, which is the approach that we have suggested. I think I'll stop here for the sake of time.
Thank you, Elineema. So I open the floor to audience to if there is any clarifying questions which you want to ask now from Elineema. Now it's time for that, for maybe 1 or 2 questions. So.
Okay, thank you for your presentation. You said that ICT help you to have access to more data. And I want to know which kind of data ICT give you access concerning the taxpayers.
Thank you for the presentation, a great example. I think it can also provide lessons learned for other countries. I would like to know how did the risk scores are assigned, and if you can elaborate a little bit more on that as a clarification. Thank you.
Thank you. Yeah, I had a similar question, and then I would also ask, on top of that, did you segment the taxpayers by size, by sales, by sector of activity? Yeah, that would be great. Thank you.
Okay, thank you for the very good questions. In terms of how ICT helped to get the data, I said we use the iTax systems, which is the system that collects or records taxpayers' informations. So what we did is to extract information from the iTax systems and impute into the developed Excel sheet, which was pegged with the flags, right? So the information was taken from the iTax system, so they were imputed in the developed Excel spreadsheet, which was actually designed to have a score points. So the question is how the score were made. Actually was on the risk-based, the area that the tax administrators used to say the areas that have score. For example, how did they calculate the depreciations? How are they reporting? Did they report timely? For example, did they submit the document timely? And how have the information verified in the systems? So it is those criteria that actually taxpayer expected to do before the examinations. And the procedure are well open. So if, for example, the deadline for submit the document is lapsed, is considered to be an indicative of a high risk and taxpayers. So there are quite a number of them where they are classified. So there are quite areas which are considered to be much prone risk to the relative less risk. So they are giving a score. Yeah. So about the segmentation, yes, the taxpayers were divided according to the sectors, according to the industry type, level of returns, and so forth. There are different categories that were done. Thank you. If there are other round of questions.
So the next presentation will be by Yenda Shamabobo, and he is a Zambian economist with over 10 years experience in applying econometric, statistical and research techniques in providing solutions to problems in tax policy and administration in African country context. Yenda has spent most of his career working for the Research and Corporate Strategy Department of the Zambia Revenue Authority, which he joined as a statistician in June 2012, and 2 years later was promoted to senior economist. Currently he doubles at ZRA as senior economist in Research and Development Department and as executive assistant to the Commissioner General. He will present the paper assessing the impact of a withholding VAT intervention in Zambia.
Thank you, Maria. So as introduced, the paper I'm presenting is a collaborative effort between the Zambia Revenue Authority and the UNU-WIDER. So in this paper, we assessed the impact of a VAT withholding mechanism in the Zambian context. Well, just maybe to introduce the study, many studies have shown that developing countries like Zambia have challenges in ensuring compliance to tax laws. And this is due to things like informality, poor record keeping, poor ICT systems, poor interoperability of systems across key entities in the economies. And withholding mechanisms through third parties have proved quite effective in improving compliance. So in the Zambian context, we were noticing before 2017, we were noticing challenges around VAT. I should hasten to mention that we are an extractive industry dependent country. Predominantly our economic activities are copper mining. So we have, I think we're the third producer of copper in the world. We have large MNCs which operate in our economy. So, and then by law or by practice, you know that for exports, mineral exports or any type of exports, usually VAT is zero rated, implying that these entities, when they produce their minerals, at the point of export, they are entitled to the VAT refund for the VAT they would have paid on their input side. So now the input side is made of two markets. The first one will be the external market, which will come through customs, and that is effectively captured by the Revenue Authority. Then the second market, or source of inputs, is the local markets, which now is comprised of entities which range from micro to large, which supply these mining companies and other large companies. So now we were noticing that companies would, or local firms would supply vatable products and services to the mining sector and other large companies. However, they would disappear in the chain due to informality. So they would be paid the VAT, which they are expected to remit to the Revenue Authority. However, they disappear in informality, but the large firms, the mining companies and these exporters would still come and claim the VAT from the Revenue Authority. So over time, we're building a situation where we are almost always, domestic VAT especially was almost always negative. And I know that in many other countries, they faced this similar problem. So to solve this, one of the interventions we introduced was the withholding VAT mechanism, which was introduced in 2017. This is a mechanism where if an entity, a local entity supplies vatable material or products or services to an appointed agent, that agent is expected to pay the supplier minus or less the VAT. Then the agent will pay the VAT at the same time as they are making their other obligations to the tax authority. So in total, currently we have about 213 entities that are withholding. So this includes large players in the economy. I mentioned earlier, mining companies. It also includes the public sector, so central government and all public entities, because they are major buyers in the economy. They're also appointed as agents. And a few other firms in the finance and insurance sector, manufacturing and so forth. And so together we have about 213 firms. Then in terms of the rate of withholding, these firms are expected to withhold 100%. Currently our VAT rate in Zambia, the standard rate is 16%. So meaning that these firms, when they buy anything that attracts VAT, they withhold the entire 16%. And are expected to remit it to the Revenue Authority on our behalf. So for this study, The general objective, as earlier mentioned, was to understand the impact of withholding VAT reform in Zambia using the study period 2014 to 2020. Specifically, we wanted to establish whether this mechanism had an impact on the behavior of the firms in reporting or compliance, and then also to establish the statistical impact on the collections of VAT. We chose the study period 2014, beginning from 2014, because that's when also we heightened our digitalization agenda in the Zambia Revenue Authority. In 2014, we introduced a system called Tax Online, which allowed firms to file their tax returns online. And then the structure of the return form for VAT and other tax types was changed from an aggregated form where taxpayers prior to that were just aggregating their sales, aggregating their purchases, and then netting off in the return, just about 3 or 4 fields. In 2014, we changed to a detailed return, where they were expected to list all the purchases against all the invoice numbers, against all their suppliers, and also all the sales detailed to each and every, to product level, if I can say, product and supplier level. So this enriched the data that we started collecting from 2014, in that now we could get firm level to product level, even like for employee, if it's PIT, to even employee level, through the change in the ICT systems. So the relevance of the study, aligned obviously to the objective and the problem that I mentioned earlier, was just to, first of all, to add to the body of knowledge. I think, as mentioned earlier, there's scanty literature on the impacts of these withholding regimes in the developing country setup. Also, studies which exist mostly are looking at either a product level or a subnational level. Well, in the African context, there are similar studies, I think one by Majoni, who did a similar exercise in Zimbabwe. Also, we use the diff in diff method just to estimate a little bit more accurately using that experiment. Then also, the major relevance was to draw some policy insights as to how policymakers and administrators can understand whether these mechanisms actually work, or maybe they're just there to disturb behavior of the taxpayers. Yeah. So I won't go so much into the methodology. I mean, we already know how the diff and diff works, but I'll talk about the variables of interest, where basically the reported sales from the returns. Remember, I mentioned we have the granular sales, taxpayer level, product level, transaction level. So we also wanted to assess the impact on the reported purchases, on the reported value added, and also the reported output VAT. I'll skip this. Then in terms of the data, for that period of study, we had a total of about 13,300 firms participating in the entire study, of which about 4,559 had interacted with withholding VAT. This subset had interacted with withholding VAT. So in terms of, maybe I can talk about the way we arranged the treatment group, was basically firms who supply to withholding agents. So these were strictly firms who supplied to withholding agents, and we wanted to observe the impact mostly on small and medium-sized firms. So in Zambia, we categorize, let me say, medium and small firms being using a standard where we look at the annual turnover. So annual turnover below, I think it's about 50 million kwachas. I would have to change that into dollars, but about 50 million kwachas and below. that is either a medium entity or a small entity. So these were basically the entities of concern, because we know that the high probability of large firms participating in there's a high probability of large firms participating as withholding agents themselves. So the control group was now consisting of firms who had never sold to withholding VAT agents even after introduction of the withholding mechanism, but we excluded the withholding agents themselves just to avoid contamination. So the data, we had about 53,500 observations in total in the data. I can talk a little bit about the descriptives just of the firms which were participating. So we see that there was an increase, a significant increase in returns filed after 2017. However, we have other two interventions which were happening at the time. And I think the first one was, well, at the same time, first is in introduction of the withholding mechanism itself. Then we also had the tax amnesty, an economy-wide tax amnesty at that point, where taxpayers were encouraged to file their returns, get their liabilities accurately determined. Then for those who entered on taxpayer, what do you call them? Tax payment agreements were allowed to enjoy their penalties and interest being waived off. So that also could have affected the returns filed. However, it affected both the control and the treatment group equally. So it was nothing to worry about in terms of the estimation we were doing. But otherwise, we noticed that in the treated group, the increase is far much higher after the increase in returns filed is far much higher after the withholding intervention is introduced. Then in terms of the sectors which participated, the distribution by sector, we basically had most of the firms coming from the wholesale and retail sector. Remember, these are predominantly, well, we are looking at local activity, and even our VAT register mimics the same structure where most of the firms are most of the suppliers, in terms of numbers, are in the wholesale and retail sector, followed by manufacturing, as is seen here. Now, in terms of the results, we first of all checked whether the parallel trend assumption was holding for all the variables of interest, and it was established that yes, it was holding for total sales, for value added and total output VAT, except for purchases. Purchases, we had an ambiguous effect. The parallel trend assumption was not really holding. And the graph on my right hand side shows us the effect of the DID estimates, visualizing the DID estimates. This is before and after the intervention was introduced in 2017, and we see a significant increase in the variables of interest after the intervention is introduced. So I'll skip over these graphs. This is just showing what's happening to output VAT, as I already explained, the total purchases, the value added. Now, in terms of the statistical impact, what we find is that the intervention, first of all, is statistically significant on all the variables of interest. Of course, with an ambiguous effect on purchases, on total purchases, as I mentioned earlier. But however, the others, value add, output VAT, and total sales, the intervention is found to be statistically significant. And in terms of the actual impacts, we found that the intervention led to an increase of 12.5% in total sales reported, holding all other factors constant. It also led to 20% increase in output VAT reported, and 10.5% increase in value added. Now, policy insights. Basically, the study showed that withholding mechanisms can statistically improve first of all, reporting. It can change reporting behavior of the firms which participate in these mechanisms because they know, like for VAT purposes, since their VAT is withheld, they are forced to report or to file returns so that they can enjoy in case there's a share of a refund that they are entitled to. Remember, VAT has got that input-output mechanism, then the net is the liability. So if the entire share from one to a certain group of suppliers is withheld, those whose VAT is withheld are forced to file returns so that they can consequently also file or pay the correct liability. Then also we observe from the study that the design of the mechanism, however, should be carefully done because you have to take into account, first of all, administrative costs. There are some taxpayers, even if you appoint them as withholding agents, they're very difficult to manage. You have to change the type of a return. You have to introduce basically even a new return for withholding VAT, a separate return. That's what we did in Zambia, a separate due date. And also we had to alter our system, our tax online system, to accommodate withholding VAT, which can lead to higher administrative costs and also training, retraining of staff, but also compliance costs to those withholding agents, and because they are doing extra work on behalf of the administration, and some of them you find that they are owed money by the administration, they are owed refunds, so, and they've collected this money, so they tend to be those issues. Then, however, because of that significant impact, it's also recommended that these mechanisms can be extended to other difficult to collect taxes like informal sector-based tax types. I know in the developing world context, we have like turnover taxes for small businesses which do not report their sales and purchases. So a turnover is a presumptive tax. So for such tax types, certain categories can trade with larger entities. So you can choose to appoint withholding agents in that manner to increase compliance or to increase capture of the tax revenues. We have done this also in Zambia. For instance, we've done this for mineral royalty. We have a lot of artisanal mining license holders. So these, you cannot see them on the radar. They're not there on the taxpayer register. However, they trade with bigger mining companies. So they may sell their output, manganese and so forth, to bigger mining companies. And if you don't appoint those bigger mining companies that withholding mineral royalty agents, we lose out on the mineral royalty in the value chain because mineral royalty by law in Zambia is supposed to be paid upon each and every sale. So we've introduced the mechanism to mineral royalty for certain categories of minerals. I think I'll end here for now. Thank you.
Thank you, Yenda. So we have again time for a few clarifying questions. So if you have any questions to Yenda, yeah, there is one.
Thank you so much for your nice presentation. I'm Armand Bouchouang from the University of Chiang, Cameroon. I highly appreciate your study, the methodology, and especially the results which come out. Then I have one main worry, is especially about the reality, or maybe the local level analysis that we can maybe conduct in the specific case of Zambia, because I don't know if the effect remain the same at different at subnational level. I suspect some contagious effect in your analysis, because sometimes firms react based on their local environment, local context, especially when they should declare taxes and so on. So have you conducted some specific local or subnational analysis, and if so, how are you tackle maybe contagious local contagious effect in Zambia? Thank you so much.
Thank you. Very good research. I am Balint Van from Hungarian Ministry of Finance, and we also have withholding VAT, but not such good evidence about their effectiveness. So I hope we can catch up later. And I wanted to ask about how have you selected the control groups for the for the definitive.
Thank you, my brother. I think this is very good. I'll start with the suggestions. One of the recommendations from the study, we're saying that because the withholding regime is effective, it needs to be extended to other tax heads, such as the turnover tax. I'm thinking the turnover tax is a tax for small businesses, right? So how exactly should it be implemented, a withholding tax on turnover tax? Because this is an income tax. Who is going to withhold? The turnover tax, these are small businesses there, so Yenda goes and buys something from these shops. So who is going actually to withhold from these small shops? And then the other is, I think I'll appreciate to, is the paper ready? Because I wanted to ask about how you're ensuring that if someone withholds my VAT, you're able to tell, you're able to tell that this VAT was withheld from this taxpayer. Is this data coming through a system, and is the return designed in a way that it is mandatory to declare the tax identification number of the person that have withheld from, so that you can match that data to confirm?
Okay, thank you so much for those good questions. I'll start with the first question, which was asking whether we tried to evaluate at subnational level, impact at subnational level. In this study, we did not do that, because there are some studies which have done that in other contexts. Like I mentioned in the relevance of the study, this, to our knowledge, was one of the first studies to evaluate the impact of the withholding mechanism at a national level without restricting it to a product type or sector. So it was deliberate in what we were doing, but it would be nice, again, like you suggested, for us maybe to check the subnational effects. I can talk about the structure of the Zambian, the geographical distribution of economic activity in Zambia, like especially for VAT purposes. It's largely in two regions. The region where our capital city is, and then the region where the mining companies are. It's called the Copper Belt and Northwestern. So probably most of the suppliers, VAT registered suppliers, are in these regions. We could try. That's a very good thing. We could try to see the effect when we introduce the geographical aspect and spatial aspect. Then the control group, how it was chosen. So the control group, basically these are firms which had not dealt with the with any withholding VAT agent before, both before and after the intervention was introduced. So because we created a panel of firms, we had returns from 2014. Remember, as I said, so the returns filed will show which supplier you're buying from. When you file a return, when a taxpayer file a return, it's to get the granular level. They'll show who is supplying them the products, so that they'll put even the taxpayer identification number. It's a unique number for all taxpayers. It will be there in the return, as well as the unique numbers for the taxpayers that they're buying or they're selling their products to. So now, when they're selling their products and services, they'll also detail, first of all, whatever it is they're selling and buying and who is buying. So now we are able to see, we have got the T-pins again in the data, or the unique identifiers of those firms who are withholding agents. Remember I said there are 213 of them. So if you haven't interacted with this firm in this entire period, then you qualify to go into the control group. Then now it's also related to the other question that Ronald asked. So this is happening in an e-system, in a digital environment. So they are expected to file a return. It has a schedule of all these transactions. So these will be thousands of, every schedule for each taxpayer will have thousands of T-pins for each withholding agent, for instance. So for those entities that is withholding on, it's by law, when they are appointed, that they are supposed to detail again. They'll have all the details, the TIN, the taxpayer identification number, the products that they have bought from this, and the value of VAT that they've withheld, the total value of the product sold. So you are, with this data, you are able to do almost like a detailed input-output analysis of the entire economy, because it's showing you exactly what they're buying. So again, we can trace each and every tip-in to the sector. We can go back to the demographics of each and every tip-in, because we've got a tip-in in these transactions. It's going to tip-in level. So, and like I mentioned, everything is done in the system. So we had to redesign our system to accommodate the return. We call it a withholding VAT return. It's a separate return. There's a standard VAT return, and then there's a withholding VAT return. So for the standard VAT return, in fact, even the filing dates, there are two filing dates. So the standard one is filed before, it's on the 16th of every month, whereas the withholding VAT return is filed after. Because we know that these agents now, they need to do their own return after that, and after that they compile now the returns of those they withheld from. Then in terms of turnover tax, how you can introduce it to turnover tax? Oh, sorry.
We can maybe stop here and leave that for the more general discussion, so we have
Okay, so
enough time
you can
for
go.
others because this is really interesting topic, of course. So thank you, Yenda. So there is lots of discussion around this topic. So thank you for interesting presentation. So the next presentation will be by Ronald Waiswa and Yenda Lastunen. So Ronald Waiswa is Research and Policy Analysis Supervisor at the Uganda Revenue Authority. He has collaborated with the UNU-WIDER on a number of research projects in Uganda on issues including tax in small businesses, tax benefit microsimulation modeling, among others. And Yenda Lastunen is a research associate at UNU-WIDER. His work in WIDER's Southmost program focuses on tax benefit microsimulation models in developing countries. Yenda received his PhD in policy analysis from the Pardee Rand Graduate School with analytical concentrations in economics and quantitative methods. And they will present the paper, An Assessment of Presumptive Tax in Uganda, evaluating the 2020 reform and 4 alternative reform scenarios using Uganda tax benefits microsimulation model for Uganda.
Okay, thank you so much, Maria. This study is about an assessment of the presumptive tax reforms in Uganda. Presumptive is basically a tax for small firms, as we all know. So it is a tax on it's a final tax on turnover of small firms. The implication is that if you're paying presumptive, you don't claim. There are no allowable deductions. It's just a tax on turnover. So if your turnover is a certain value, they get a percentage of that turnover at the end of the year. And it's a popular tax almost in Africa. African countries, almost all of them have at least a tax for small firms. And in Uganda, it is came into play at the point when the income tax was actually introduced in Uganda in 1997. Now, since then, I think it has gone through about 4 reforms, and the most recent one is the one that happened in July 2020, and the purpose of this study was to assess the implications of the reform in July 2020, what it means in terms of revenue, whether it simplifies the process of complying with presumptive taxes, and whether it simplifies and addresses the problems that the old regimes had before. And overall, before the 2020 reform, and even the 2020 reform, we see about 3 major challenges of presumptive taxes in Uganda. One is that there is a lot of non-compliance, high non-compliance. Most of them, in most cases, they pay once. And the nature of presumptive taxpayers, they only pay when the revenue body actually reaches out to them. So most of them, you find that they pay at the point of registration. After that, several years, they don't pay. But also, the previous regime was more complex. It had about 80 tax brackets. So the purpose of the reform in 2020 was to kind of simplify that old regime, and also to boost revenue potential. However, even when we did this analysis, we were still concerned about the fact that even the recent reform is actually complex, as we shall see, and also it resulted into a loss of revenue, as we shall see. And therefore, in this study, we propose 2 other reforms that we think are good in terms of progressivity, but also in terms of safeguarding government revenue. Now, overall, presumptive taxes in Uganda, like it is everywhere in Africa, like I said, it is a tax for small farms. So its contribution to revenue is really small. For instance, when you compare here, these values are in Uganda shillings. Sorry, I think we shall have to change this to dollars. But you see that averagely, we collect less than 10 billion Uganda shillings. Now, this is very little compared to what we are getting from other tax hits, as you can see, pay as you earn, which is a payroll tax, and then CIT, which is the corporate income tax. So the share of presumptive to overall revenue collections is really small. But also it is a tax with a lot of potential. There are high estimates given to targets given to presumptive tax, but in most cases, we collect far less than the target. Here in 2016-17, for instance, they gave a target of 60 billion, and we only collected 70% of that target. And this point here is a point when they had introduced new initiatives to effectively tax the small taxpayers. But again, we collected only 70%. And over the years, we see that we have never collected the target given on presumptive tax. Now, this study is collaborative. So the assessment we did on this is a collaborative undertaking between WIDER, UNU-WIDER, my colleague here from UNU-WIDER, ourselves at the Uganda Revenue Authority, to increase uptake of the policies that were coming from this study. We also engaged the Ministry of Finance, the Tax Policy Department, and also colleagues from SASPRI. And it uses a unique methodology, not DID, like my colleagues were using here. We used a tax benefit micro-simulation model, which UNU-WIDER and SASPRI have been supporting many countries in Africa to develop. Basically, they are tax benefit micro-simulation models. And what we did is to basically use the model to estimate the distributional impact and the revenue impact of that reform, and also to use the model to assess the implications of the alternatives that we're actually suggesting. Now, the reform in 2020 had 2 options. One, that they will tax you depending on whether you have records or you don't have records. Now, if you declare that you have records, this would be your rates. So if you're in this bracket, you pay these kind of rates. If you declare that you have records, then they tax you according to this bracket here. Now, the problem is that we see when you look at this, it is a bit unfair. The current regime is unfair to firms that do not keep records. And ideally, URA actually doesn't have the capacity to tell that you have a record or not. They just implemented on the system a question, do you have record? So you can just simply say, yes, I have a record, and then you pay less. That is one weakness of this. But also, when you come at this, we see, for instance, that if it is too unfair to people without records. So for instance, if you are between 10 and 10 and 30 million turnover from here, you pay a fixed value of 80. Now, if you have records, you can actually pay 0 here. As you see this bracket here, I think the best example to use is this upper one. This is for 80 to 150. So all of them are paying a constant value of 900,000 Uganda shillings. But it is constant. So if you're 80, you pay 900,000. If you have 150, you still pay 900,000. So it is not progressive. So those with records is a bit progressive, as you can see this. So someone at 80 will pay something less than 200,000 here. Someone of 130 will pay around here, which is roughly 600, etc. So it is a bit unfair to people that have no records. But again, like I said, it's not clear. There is no clear guidance on what constitutes a business record. So if you have a receipt, should we consider it as a record? So what taxpayers normally do, they just go in the system and they say, yes, I have a record, and then they pay something greater. And because of this reform, we also see potential tax revenue losses of between 48 to 72% compared to the previous regime. Now, in terms of progressivity, actually in terms of effective tax rates, for instance, here we see that when you're at 10 and you don't have records, you're taxed at around 0.8% compared to one with records, which is taxed at almost 0%. Similarly, when you're here, for instance, this is at 80, and you declare that you don't have tax records, you're taxed at above 1% compared to this one with records, who is taxed at below 0.5%. The same applies here. This one is taxed at 0.6%, one of 150 million shillings, 0.6%, but one of 80 is taxed at above 1%. So it's kind of unfair to taxpayers without records. But also, like I said, it is very difficult to define what a business record is and what doesn't constitute a business record. Now, there are different reforms, 2 scenarios that we modeled to kind of suggest to the tax policy department on how best to design a presumptive tax reform. And I will let my colleague Jesse to go through this.
All right, thanks, Ronald. So hopefully Ronald kind of convinced you that the current system is actually quite challenging, or has a lot of challenges in many ways. You have this 2-tier system of those who keep records have different rates compared to those who don't keep records. You have these revenue issues compared to the previous system. So the nice thing about tax benefit microsimulation models is that we can try different hypothetical reforms that might be used to replace this system, as Ronald mentioned. So the first idea we had was quite simple. So basically we wanted to do 2 things. Firstly, eliminate this kind of 2-tier system of different rates for those who keep records and those who don't keep records. In addition to that, we wanted a reform that would raise more revenue. So we basically followed what you see here in the orange line, the policy for those companies with records, but we increased the rates essentially. So if you look at the tax schedule on the corner here, you can see that we have 3 bands applying to turnover between 10 million and 150 million shillings, with little bit differences in the rates compared to the actual system. So in terms of the effective rates, it looks like this. So you can see it's quite progressive. It raises more revenue compared to the existing system. However, you can see there are some kinks there as well in the system. So this is already better, we would think, but we were wondering how to simplify this further. So actually kind of echoing what Mario Moncheur from IMF said on Wednesday, tax design matters not just for fairness and revenues, but also incentives. And this incentive question was something we wanted to pay attention to. So basically, we wanted to test out hypothetical reforms that would make it as likely as possible for very small informal companies to pay some tax to begin with, kind of easing their growth in the long run, and kind of with the hope that they would pay more taxes in the long run. And that's something that requires simplicity and also transparency. So we came up with this very simple idea of a single flat tax rate of 1% applied to turnover of between 10 and 150 million. In terms of the effective rates, it looks like this, very simple. Of course, it's not as progressive as the first reform, but it's, again, much simpler in many ways. Looking at the microsimulation estimates, it also most likely increases revenue compared to the existing system. You can get this, negative impact as well if you compare this to the, basically assuming that there are no companies that would keep records. So that's a scenario, but most likely this one would increase revenues as well. However, this doesn't create as much revenue as the first reform. Of course, it's not as progressive. So we wanted to try something else as well that would keep the benefits of this flat tax rate, but also increase more revenue, maybe be a little bit more progressive. So we tried a 1.5% flat tax rate applied to the same revenue bands. In terms of the effective rates, it looks like this. So again, not surprisingly, it increases revenue compared to the current system quite a bit. Yeah, so those three reforms we're showing here. We actually did have a fourth one, but it's quite similar to the first one, so it's not shown here. Then I wanted to discuss these kind of different modeling approaches we had to derive these revenue estimates, but maybe to save time, I'll skip these for now and jump to the conclusions. So yeah, here you can see some of the estimates we have compared to the existing rules. But in conclusion, each of these alternative reforms would probably bring at least as much revenue as the current system, and most likely more revenue, up to 2 times as much revenue as the current 2020 system. Especially these flat tax proposals are very simple, very transparent, both to taxpayers themselves, but also the tax administration in terms of enforcement. So there is this kind of potential to promote long-run tax compliance, more revenue in the longer run. One very nice thing about these reforms is that effective tax rates and also absolute tax liabilities always increase with turnover. So each reform is kind of more progressive than the current 2020 system. And finally, we did something concrete with this research. So Ronald actually submitted our proposals to the government in the annual budget cycle. Was it last year, I think? So yeah. So who knows? Hopefully something comes out of this, and the government actually takes a look at this work as well. So I think that's it from me and Ronald. So thanks.
Yes, so we have maybe a few questions. So let's start from the here in front.
Thank you very much for this interesting presentation. I'm working at the OECD for the Center for Tax Policy and Administration. We have been doing some work on presumptive tax regimes in developing countries. We don't cover Uganda, but we would be happy to do so. But my main worry, I have to say, is that it seems that the approach you take is very much focused on raising revenues. And I'm not very convinced that that's the role of presumptive tax regimes. In the work we've been doing, we put a lot of emphasis on the objective of those regimes, which are to make people go out of informality and to formalize, and then to help them grow so that at some stage, hopefully, they can migrate into the standard tax system. And by focusing so much on raising revenues, I am afraid we kind of lose track of that primary objective, which is to attract taxpayers and small businesses into the formal net. So, yeah, I don't know. I can understand that from a tax admin point of view, you want to raise revenue. That's a fair objective, but I'm not too sure that this is the right approach when it comes to presumptive tax regimes. And in the very first slide that you presented, you compare with other taxes, and of course, the revenue you raised are very low, and that's very normal. I can understand that the worry also comes from the fact that you have an objective and you don't reach that objective. But again, I think we should not fall in the trap of we have this objective to reach, so we're going to be very, very tough on tax enforcement. Because again, I think the goal of those regimes are to incentivize people by providing, for instance, in Latin America, stakeholders are in presumptive tax regimes will get access to some social benefits, for instance. So, I don't know, just a thought.
Thank you for your presentation. My name is Magloire. I am a PhD student at CERDI. So I have the same question because in another session, we talk about the political economy that we have to take account. So here, yes, your reform are raising more revenue, but you are raising more revenue because the taxpayers are paying more. So the question is, are you sure that they will accept to pay more? Are you sure of the feasibility, the social feasibility of your reforms? And another question, you say that the presumptive tax in Uganda is on small films. So when you say small films, are you considering also informal films? Informal films, you are considering them as small films, or your system is not considered informal films? I don't understand well, because you say presumptive tax in Uganda is tax on small films. So my question is, informal films are also in this category, and how you manage to tax informal films? Thank you.
All right, thank you. I'm Daniel Amoa, a PhD student at Memorial University in Canada. There is a very interesting study, and I'm very curious about a lot of things. You did mention that there are disparities in the payment of taxes, and I'm wondering whether those who don't keep records knows that if they don't keep records, they will be taxed more. And looking at the rate of informality in Sub-Saharan Africa, I'm also wondering, are there any incentives? Is there any threshold when it comes to the payment of taxes? Are there thresholds that those who meet this who meet a particular threshold are supposed to pay amounts? Is there anything like that? I'll be happy to have a read of the paper, so because I'm curious about a lot of things as the presentation was going on. All right, thank you.
Okay, maybe I'll go first, then I'll give my colleague. Yes, starting with the first one, where the concern is on the fact that whether we're focusing on raising revenue. Actually, this is what I can say, that first of all, what we did here was I like it so much because it was one of the most comprehensive analysis of tax policy. For most of the revenue bodies and tax policy departments, in most cases, the question they ask is how much revenue are we able to raise out of this policy? It's the guiding question for most of these tax policy makers. Now, the beauty of using such a system, the UGA model, the tax benefit micro-simulation model, is that it gives you a more complete picture on the analysis of policy. So for instance here, our interest was actually beyond revenue. It was on, yes, is it progressive, the current regime? Because there was a reform in 2020, which we are analyzing here, and there was another tax regime there for presumptive. And what was actually done is that the other regime was more complex. That was one of them. But also two, it was that it was regressive. So our proposals that we are suggesting here is we want something which is progressive. Now, in terms of the tax rates, the regime, the new regime significantly lowers the rates. The old regime, the rates were a bit higher. What we are proposing is not rates beyond what it was in the old regime, before the regime. So even our proposals, so our suggestion is that yes, the rates come down, but not so significantly low that the government loses a lot of revenue. One thing we also need to know is that in Africa, generally the tax base is low. So yes, the objective can be to incentivize formality, but also we must tax to be able to provide the public services. So yes, we need to incentivize these small firms, but we cannot entirely deal away with the revenue. Otherwise, governments will not function. I think how do we tax the informal things, informal farms? I think that was his question. In Uganda, there is also a paper that I did with Maria on how Uganda taxes the informal sector. We have a project which is called the TREP. TREP is Taxpayer Register Enhancement Project, which focuses on door-to-door registration of these farms. So the best way to tax some of these small farms is ideally door-to-door. You just go and assess all the farms and they pay. And that's why I say that because of the high or the low poor tax paying culture in most of these African countries, you find that this farm pays today when you're there. If the revenue authority is not there, they can never come by themselves that they are coming to pay. And then on the thresholds for payment of taxes, yes, they are there. For presumptive, like the starting threshold is 10 million Uganda shillings. So if you're below 10 million Uganda shillings, then ideally you're not supposed to pay. However, the problem is that they do not keep records. So it is very difficult to tell whether you're below or you're not below. So at times they just register all of them. It is a weakness on both the side of taxpayers, but also on the side of the revenue body because of the lack of records. Even for employees, there is a threshold. So ideally there is a threshold. Those below don't pay. Those above pay. Hope that answers your questions. Thank you.
Thanks, Ronald, and thanks for the question. So just briefly to add to the question about our emphasis on revenue, actually it's not really phrased well in the presentation, I think, but that was actually one of the main ideas of these flat tax proposals, would be to allow the tax system to work kind of as a stepping stone for very small companies and informal firms to eventually, just get into the tax system, eventually grow, pay more tax. And the other thing about these flat tax proposals is that they are likely better aligned with other tax systems that companies will have to face if they grow enough. So whether that's corporate income tax or individual business tax in Uganda. So that type of a system could be quite easily aligned with whatever happens next for these companies after they've grown enough, or part of them at least. I wanted to say something else, but maybe I forgot. So let me give it back to Mari.
So thank you for the questions and answers. So maybe this is a good bridge to come back to the Yenda's question about, Ronald asked about how withholding system can be used on the turnover tax in Zambia context, as Yenda mentioned that in his presentation. So maybe I give Yenda mic to a little bit tell more about.
Thank you, Maria. So one way is to use withholding on turnover tax by public entities. So not all these, like in Zambia, I don't know about Uganda. In Zambia, we define those companies which are supposed to be on turnover tax by their annual turnover. Again, it's prescribed by law that any business whose turnover is 800,000 per year and below will be on the turnover system, unless they opt to go on the voluntary VAT scheme, where now they will register for voluntarily for VAT, and they will have to also register for corporate income tax. But those that are on the turnover tax, 800,000 and below, I think that's about $20,000 per year and below. So companies which make sales of this value are on turnover tax. But these companies also trade with, or they supply to public entities. They supply to the central government. We've seen it in the government. They supply, so they make small supplies. However, when they supply, the turnover tax in Zambia is 4% of the turnover of the amount you've sold. But we find that some of them, they sell to the government, they are paid, and they don't remit that 4%. We have a hard time, and then these are in the informal sector. It's hard to catch them when they disappear in the economy. So once that is, you use your public entities and withhold this tax. Probably you can appoint more players, like I said, like bigger players who are identifiable, like the mining sector. They still deal with small firms who are not registered for VAT. So they can again withhold the 4%. Provided you just now design the system in such a way that these firms will identify by using the tipping, who is registered for VAT, who is registered for what tax type, and that information the Revenue Authority will have. I can maybe say it in that manner.
Can I just ask one more? Okay. I think that is a withholding tax, which we actually have. We have it at 6%. Because practically small firms, how many are supplying to government institutions? Because these are small, less than $20,000. This is small money. So these are firms on the streets selling to the local community. These are shops. So I really see very few of them actually supplying to government.
So I can just add, there's also tax planning. Yes, on paper, on descriptives, you can think these are very small firms, but there are taxpayers who are very clever who stay below the line because they don't want to pay. They've calculated their tax liability in such a manner that if they register for VAT and income tax, they'll have more liabilities because now the scrutiny is more. They'll have to register for payers UN, all these other formal tax types. So there are taxpayers who can have even 100, let me say maybe more than 10 accounts which will be sitting on a turnover tax, and you will never catch them if you keep on treating them that manner. And they'll be getting contracts, and they're sharing them amongst their firms. So to avoid, to increase the capture of such tax revenues, you can do withholding, because anybody who trades with who is trading, supplying to bigger entities in the economy, they definitely know what they're doing.
Thank you. Has audience more questions? Yeah. Mike.
Okay. I know that you start answering this, but I want to know about the social feasibility of the true reform that you have talked about. Because I was saying that in another session, IMF staff show that they want to do a tax reform in a developing country, and after that they have to abort the reform, as the reform cause many problems in the country. Taxpayers don't want to have this reform, etc. So here, with the reform you have shown us, I want to know if you think about his feasibility, and if you are not, if you don't see that it can bring some firms to go to informality, for example.
Okay, in terms of feasibility of the reform, let me start by saying that the tax has always been there. the old regime was actually more expensive and more complex. When they simplified it to put with records and then without records, currently it is impossible to define that this taxpayer has records and this taxpayer doesn't have records. By the real definition of presumptive, the main key indicator of a presumptive taxpayer is that you don't have records. Now, when you bring a reform which is saying that you either have records or you don't have records, ideally if you have records, then you file under the real regime income tax. So, putting the option of you have a record or you don't have a record is not feasible, and that's what we are trying to address in this study. And I think that's it.
Yeah, maybe super briefly. So we showed these two flat tax scenarios, and just by design they are, as Ronald said, much simpler than the current system already. But what you could do, for instance, is to make those reforms revenue neutral. So reduce the flat rate a little bit, produce roughly the same revenue with that system than with the current system, and that would at least be kind of a win-win situation with no revenue changes, simpler system. I would guess that any small business would rather go for that system than the current system. So at least this would provide some options, or this work provides some options for the government in terms of thinking about the overall design, which hopefully doesn't lead to these disincentives. So yeah.
And maybe where the farms will become more informal. Like I said, in Africa, even if the tax is 0.01%, people are not willing to pay it. So the manner in which presumptive taxes are enforced, like I said, people only pay if the revenue body comes on your door and knocks and say, you must pay for this year. If you don't go to their office, to their businesses, they will not pay. So the manner in which it is enforced in Uganda is door-to-door assessment. So whether it is 0.001% or it is 1.2%, there is no guarantee that if it is low, people will come. Never. Because we have trading licenses, which are very little, but still they don't pay.
I think the way I see the discussion goes, I think it's just because there's no more time, but the approach that they use is a static microsimulation model, which tries to come with objective answer to what if we do these reforms, what will happen in terms of revenue collections. So the fiscal act defines, according to what Verod says, this is what presumptive tax according to this category pays this amount. So they're trying to propose, what about if we revise the rules which say this and this, how much can we collect? I think it's just because Ronald didn't have time to explain the approach, the model itself. Thank you.
Maybe just wrapping up, maybe something more broader, because we have talked about lots about enforcement and strategies, how revenue authorities can raise more revenues. Is it the tax policy or enforcement policies or something else? Have you seen that the tax administration is taking these into account and building these new ICT solutions as in Elineema study, and do you think that they are willing to and eager to implement those in daily base work? Maybe Elineema.
Yes, thank you, Marie. Yes, let me say that tax administrative revenue authorities are now in most of developing countries, they really knows the potential of the use of ICT in terms of revenue collections. And if you look very clearly, there are quite a number of systems that are introduced in terms of tapping revenues in the area where they were not reachable, using the system that has existed. The only challenge that I see is now there exist multiple systems within same revenue authorities. So you'll find that within the VAT, there's a certain system. If you go to another type of tax, another system. So the biggest task right now is how to integrate this system to speak together. So the potential about the system that is actually agreed, and many revenue authorities are running very fast to take the opportunity, given the digital economy that is ongoing right now. But the challenge is how to integrate these systems so that we can tap more revenue from the capacity of these systems. I remember for Tanzania, the biggest task that the Revenue Authority are actually doing right now is to see how best you can extract information from several systems to actually learn from the data, right? And again, it's within the tax authority system, but across institutions. You'll find, for example, there are quite a number of initiatives. For example, if you go to the Ministry of Land, they have information about, in their system, they have information about land and properties. What about if you want to raise revenue from the property tax and land? You feel those are institutions that are led by another independent institutions. So the effort now is to sit together across institution and within institution to see how best you can strengthen the capacity to raise more revenue within the. But another issue is the capacity, which actually, since we have more information within the system, now it's the ability to learn the behavior of the information within the systems. And that's why we see these days that there's this idea of using machine learning, which is a bit far. More capacity have to be learned, given the fact that the technology is running very fast. But in terms of appreciation of using the system, in terms of revenue, raising revenues, it is there. And the Revenue Authority are struggling a bit in terms of catching up on how best we can go to add raising revenue in digital economy.
Thank you, Elineema. Does Yenda or Ronald have anything on that topic, ICT solutions in revenue authorities? Any addition to Elineema?
Well, just in addition to what Eli has said, I would say increasingly, especially on the African continent, we're seeing tax administrations now wanting to strengthen digitalization in their tax systems. And this is with the same, focus or information that we have to analyze more of the data. If we have to catch up with the taxpayers, you have to have rich data that you can analyze. First of all, you pick up insights from your own data, then also aggregate the data. We combine the data with data from other third-party sources, which can be very important in uncovering certain patterns of non-compliance. So we are seeing this strengthened focus on digitalization. In my country, for instance, we are automating all the processes to do with our tax administration, but also we're going beyond by integrating with entities in the economy, key entities. For instance, it was even pronounced in our 2023 budget just about a few weeks ago that we have to integrate with the IFMIS system for the Ministry of Finance, because that's the central system that the Ministry of Finance uses to make payments in the economy for those who sell goods and services to the government. So we want to integrate so that, because these same entities who sell to the government, you find that they also owe tax to the tax authority. They'll have tax dates and things like that, and it's difficult to catch up with them. You have unclean demographics on your system, so you can't even enforce that. But if you're integrated to strategic institutions in the economy, it becomes easier to enforce the tax, and this is all through the digital systems. Thank you.
Thank you, Yenda. So I think if there is still one question from the audience, we can have that and then wrap up the session. If not, yeah. Thank you everyone for joining us today and hearing about revenue authorities and their policies and strategies. Thank you very much.